So welcome everyone. This is the West Business Center and I'm Kelly Geiser, your event coordinator hosting today's webinar, SBA Disaster Loans. West is a nonprofit funded by the federal SBA Small Business Administration Program, which Maria Pineda, our instructor, is from. We are both a women's business center and small business development center for Mendocino and Lake County. Through federal and state agencies matched with local community contributions, it is your tax dollars that allow us to provide our services to you for free. Our services include one-on-one counseling, webinars, loan package readiness, and advising to small business owners and entrepreneurs at every stage of business development. We also have a pool of expert advisors that cover niche business needs from permitting to HR and e-commerce, and even as recently legal purposes, legal advising, I should say. So if you'd like to learn more about becoming a West client, please visit our website or give our office a call. Just a quick disclaimer that today's webinar is for informational and educational purposes only. You can read this in more detail on our website. And without further ado, I'm so pleased to present today's instructor, Maria Pineda, who will present SBA Disaster Loans.
Hi, thank you so much, Kelly. Hello, everyone. Thank you for being here. So let me go ahead and share my screen. And Kelly, if it's okay, I think we could, if there's questions in the chat, I'd rather answer them later, okay, since I won't be able to do both things at the same time, but we'll definitely answer those questions for everyone. So thank you for your patience. Let me start this off. So welcome again to West Women's Business Center and SBA, and thank you, West, for hosting me today. So just wanted to touch base and talk a little bit more in depth about our disaster as well as guaranteed loan programs. Okay, 1 moment. Okay, so let's start off with who is SBA? So, unless you knew us before the COVID pandemic and the federal relief assistance, a lot of people didn't know about us, but SBA has been around actually since 1953, and it's an independent agency of the federal government, and our mission is to aid, counsel, assist, and protect the interests of small business concerns in the U.S. We have a network of 68 district offices around the country, and if you are outside the San Francisco district office, let's say in another state or area, you can look up your local district office for further assistance or for localized assistance by visiting the web link. Our San Francisco district office, where I work out of, serves 14 counties, including Mendocino, and hence why I'm here today. The 4 pillars of what SBA does, or one of the 4 core products or services we offer our small businesses, is access to capital, basically our SBA guaranteed and backed loans, which we'll discuss today, business advising and education, and we work through a nationwide network of resource partners, including West Women's Business Development Center. That's business advising and education. We also offer disaster assistance loans, which again, we'll discuss today. And last but not least, we also have a federal contracting goal. And it's actually quite a great goal for small businesses because 23% of federal contracting dollars are set aside for small businesses. And the US government is the world's largest, biggest consumer. So a lot of small businesses sell their products and services to the federal government. But let's jump right into disaster loan assistance, what we're here to learn more about today. So the most recent loan assistance program I was very much involved with was a COVID economic injury disaster loan as a result of the COVID pandemic. So we were quite busy doling out a fund to businesses that had suffered. They suffered from the COVID restrictions and shutdowns in their areas. So that was a very big production on our part at the SBA. But going back to pre or post COVID world, We also have loan assistance to help businesses and homeowners recover from declared disasters. And the fact that an estimated 25% of businesses don't open after a major disaster, tells you the importance of this loan assistance program. And this low fixed interest disaster loan is actually less than 4%. So it's a very good loan offer for those businesses and homeowners in need. So who can exactly use an SBA disaster loan? So unlike our other lending programs, which are targeted to small business, the disaster loan is actually open to businesses of all sizes, as long as they're located in a declared disaster area. Also, private nonprofit organizations, homeowners and renters affected by declared disasters can also benefit from this loan assistance to recoup and rebuild. How to use an SBA disaster loan? Well, the SBA disaster loan is targeted to those homeowners or small or businesses of any size that are not fully covered by insurance or funding from FEMA. Also, businesses that have operating expenses that could have been met had the disaster not occurred. For example, if a business was shut down because of a hurricane or a flood or a wildfire, usually they would have been able to meet those operating expenses. So because of this disaster, they've been knocked out, if you will. So the loan can help with working capital so the business sustains itself throughout that disaster and the rebuild phase. So these are a couple examples of what our disaster loan may cover. It could be anywhere from commercial real estate, a homeowner or renter's personal property, economic injury, again, such as the COVID loan. Because of the pandemic, so many businesses were forced closed. So the loan helped with working capital and to pay for running expenses of that business, machinery and equipment, etc. So again, these are just some examples. I looked into Mendocino County specifically. Our website does list the declared disaster throughout the country. So depending where you are, state-wise or county-wise, every county in the US is listed, showing current or past disasters. So these are some examples. In Mendocino County, under presidential and SBA agency declared disasters. Unfortunately, of course, we're all too familiar with wildfires. We had declarations between 2018 through 2021. And then we also had severe winter storms and flooding in 2019. Under Secretary of Agriculture declared disasters, Mendocino County experienced freeze and drought conditions, and this, of course, led to these declared disasters where where businesses, of all sizes, and homeowners and renters can take advantage of the disaster loan assistance. So here's some other resources. I know that's a lot to jot down, so no worries. I will be sharing this slide presentation, this PDF, with Kelly and West Women's Business Center. So this will be sent out to everyone, so no need to rush or anything. These are our web links. You can definitely look into if you have more questions about disaster planning, the loans, and how to be prepared. And eventually, if you find yourself in a disaster area and need to apply, if you have questions, you can certainly reach out to me as well via email if there's a specific question you have. Okay, so moving on to another large part of what SBA, our agency, offers is our small business guaranteed loans, okay? So unlike the prior loan, i.e. the disaster loans are originated and funded directly from the SBA to the business or the renter or homeowner or nonprofit. The difference here is our guaranteed loan programs. These are loans that are actually are delivered in conjunction with our SBA participating financial institutions. So how does that work? The SBA per se, we don't lend the money directly to, say, a commercial banker, let's say Wells Fargo, for example, or your local credit union. What we offer the lending partner is a guarantee, a loan guarantee, and that can vary anywhere between 50 to 90%. So for example, if a small business took out an SBA loan, be a 7A loan or a 504, and we'll discuss those a bit later, a lot of lenders, lender partners are nervous to give loans, unfortunately, to small business that they might perceive to be risky, or a business that's been in existence for less than 2 years. So the SBA guarantee gives them an extra level of comfort in lending out and gives them an incentive to lend out to small businesses, because if that small business defaults on the loan for whatever reason, the SBA guarantee takes a hit, in the sense that the SBA will absorb some of the losses. So the participating lender is not at 100% loss. So that opens up lending to perceived riskier, smaller businesses. So again, we don't initiate and give out the loans. We work with financial institutions. So our three basic or most important loan programs really is as follows. We have an SBA microloan program. As the name implies, it's a smaller loans up to $50,000. And the good thing about this program, even if you haven't been in existence for 2 or 3 years, micro lenders are more open to lending to new firms and new businesses, and we'll discuss that later. Another loan program is our most popular, if you will, our benchmark or flagship loan program, which is the 7A business loan program. And it's quite popular because you can use it for varying needs, and we'll talk about that later. Under that umbrella of 7A is the Community Advantage Loan Program. And like the microloan program, it's capped at a lower amount. The 7A can go up to 5 million. The Community Advantage is capped at 350. But similar to microloan, these are also extended if you meet overall criteria, but these can also be a good option for a new business that hasn't been in existence for 2 or 3 years. Lastly, our agency has the 504 Certified Development Company Loan Program. This is it's much more restricted versus the 7A. It's basically known as our bricks and mortar loan. It's only for the acquisition or construction of commercial real estate or purchasing of heavy equipment for the business. There's a couple eligibility factors. You can read that on your own. The last one I thought I'd highlight, that documenting that credit is not available elsewhere. What that just means is, for example, if you're a small business owner and you want to talk to your local credit union or commercial bank where you do your business, where you keep your business checking and savings, it's always good to speak to them first. Obviously, they know you, they know your business, they know your business track record in terms of revenue and profits, and how you're doing on the ground and how you're doing online and in the retail space, etc. It's always good to start first with your preferred banker and ask them, do you offer SBA loans? A lot of lending institutions, commercial banks such as your Wells Fargo's, your Banks of America, your Chase, all these institutions offer SBA. A lot of credit unions as well. If they respond to you that they're not able to extend that business loan because, let's say, you've been in existence for maybe just a year, your credit is a little bit under their minimum acceptable for their regular loans. Or, for example, you don't have sufficient collateral. An SBA loan is there to, if you will, plug that funding gap that exists in small business world. So jumping into a little more detail about the microloan program, as you can see, the maximum loan amount is there. Our average at the San Francisco district office in terms of businesses in our geographic footprint is nearly half that. The interest rates, they vary depending on the lender that you choose, and you can certainly talk to different lenders, see what they would offer in terms of a rate offer to you. The good thing, though, is under this program, the rate is fixed. And of course, in a rising rate environment, that's good. So you don't have to worry about rising payments once you lock into your rate. And these rates can range anywhere between 8 to 13%. And when you compare this, for example, to other modes of financing that small businesses use to launch their business, such as credit card financing, those rates are variable, and they can vary anywhere between 18 to 24%. So this is actually quite a good offer. Or, other people depend on friends or family and would prefer not to ask friends or family to help them launch their own business. So this might be a good fit for a new business or one that has less than 2 years in existence. And as you can see, you can use the microloan program for a variety of uses. In terms of who's our typical microloan borrower profile, as mentioned, it could be a startup or a new business that's been in existence for less than 2 years. And it's possible the borrower may have had some credit problems in the past. So they may not have a credit of, stellar credit of 720 plus, but, they had maybe some recent medical bills or invoices not paid, or due to COVID, maybe, the borrower was laid off and hence their credit was impacted. So the micro lenders are nonprofits. So for them, the bigger picture is economic development and job growth in their communities. So if you write a solid letter of explanation, if you had, credit problems in the past, or you're a startup, but you have good experience in what you plan to sell or deliver in the market, it's very possible they will take a chance on you, and it's a good place to start. So moving on to the bigger loan, the 7A Guarantee Loan Program. As you can see, the maximum loan amount is $5 million. So for projects of that size, you would expect to see the participating lenders are looking for firms or small businesses that have the 2 to 3 years experience. They want to make sure your business is successful, you're making revenue and cash flow to pay back the loan. Because our Wells Fargo and Bank of America and the big commercial banks and credit unions at the end of the day are here for profit. They want to make sure the loan is paid back. Okay. Now you'll see there's a little asterisk by the nonprofit right there where it says the lenders on the top. So under this 7A program, there are also nonprofits that extend that community advantage program we spoke about earlier that goes up to $350,000. So if you are a small business that's less than 1 or 2 years old, you may qualify for community advantage up to $350,000. Beyond that, you have to have a couple years in existence to be able to take advantage of this program. So as you can see here, in terms of the interest rate, it's both variable and fixed. You should definitely talk to different participating lenders and financial institutions to get an idea of what the rate would be for you. And the guarantee percentage, as we talked before, if the loan defaults for whatever reason, the guarantee percentage that the federal government would cover on that default varies between 50 to 90%. So again, the banks and credit unions are more open to lending to small businesses because of that, because the guarantee is in existence. Okay. The use of proceeds here, as you can see, is a lot. Working capital, debt repayment, also known as refinance, purchase of equipment, machinery, fixtures. So it's by far our most popular program. And again, so who's our typical 7A borrower? As well, an existing business, although startups are eligible, and the startups are eligible more so for the Community Advantage Program. Okay, so for each owner of the business that owns 20% or more of that business, the personal credit also has to be satisfactory with no recent bankruptcies. And your credit score has to meet the lender's minimum requirement. So again, the SBA doesn't force a minimum credit score. Our partnering financial institutions have their own internal underwriting guidelines. So you should definitely talk to different loan officers to check out each lender's criteria. For Community Advantage, I'll interject again. If the up to 350, if your credit score is less than the ideal for that lending institution, Community Advantage might be a good option for you. Just provide a solid letter of explanation explaining why your credit slipped. Okay. All right, so the last major program we have at the SBA, and this is definitely a loan for our seasoned small businesses. It goes up to 5 million, and you can see our loan average in our San Francisco district is 1.2 million, which pretty much reflects the high cost of commercial real estate in the Bay Area. So that's why that average is so high there. The rate right now under this program is fixed. It's about 5%. So it's actually quite competitive when you realize, the U.S. prime has been raised about 2 to 3 times in the past month and a half. So it's actually a pretty good offer there. And again, the use of proceeds here is very limited. It's either to purchase or to purchase an existing building or land, or construct or build a facility, a warehouse or a retail store or something like that. And it's also for long-term purchase of machinery and equipment, or if the small business already has the building or the warehouse and it needs modernization or improvements of its systems or that sort of thing. It's also can help improve your current commercial real estate facility. So again, this is for it is for businesses that have been in existence and can show cash flow, because the lenders, the financial institutions want to make sure you're able to pay back this loan. And who is the typical profile for this style program at SBA? And again, it's a seasoned business that can demonstrate repayment ability from historical cash flows. The owner of the business has to put a minimum 10% down payment or cash infusion into the project. So you have to have that money to put down because it won't cover, the loan won't cover 100% of the project, okay? And the way this loan program is structured, and I won't go too much into detail, but just to give you an idea, there is a first third-party lender. It could be a commercial lender or credit union. And the second, and they cover 50% of project costs. The CDC, or Certified Development Company, covers 40% of project costs. And the CDC, just like the micro lender, is a nonprofit organization, and their mission is to increase economic development and job growth in struggling areas, or they want to invest in projects that offer job growth and economic development in whatever area that project may be. So for them, it's a higher motive than just the profit motive. They want to make sure that we grow as a country in terms of jobs and just income for all. So they cover 40% of the project cost. The 10%, of course, comes from the borrower or small business. Okay. For you to, if you are interested, let's say your small business is interested in purchasing a location or a building, and if you are already working or working closely with a real estate broker that's helping you find the building and the real estate, you can certainly ask him or her for recommendations or referral to a local for a bank first mortgage lender or CDC. If you're still stuck with who to look for or what organization or financial institution you want to help you with this project, the SBA has a tool called Lender Match. So it's on our website, and by inputting your zip code, it'll provide you a list of lenders local to you or throughout the country. If it's not local, a lot of these these lenders are doing a lot online or through telephone calls and chats and things like and all that. But you can definitely find good lender to match you up with, and they'll compete for your business once you put in your information. You'll hear from different financial institutions, and if not, you can always reach out to us at San Francisco District Office, and we can provide you a more personalized list. Okay, so we discuss disaster loans and then the SBA guaranteed loans. So for the SBA guaranteed loan, it's important to have, when you prepare an application to, let's say you're interested in a 7A loan, and you're going to meet with your credit union or large commercial bank to apply for this loan. It's always, it's never a good idea to arrive empty-handed. You definitely want to have your business plan, your past 2 to 3 years, taxes, or if you are a new small business with less than 2 or 3 years in existence, it's a good idea to have projections of what you expect your firm or small business is going to make in terms of future revenue, sales, expenses, etc. They want to make sure that you're not just waltzing in, that you've actually thought long and hard about your small business and how you hope to succeed. So this is where our amazing SBA partner network fits in, and West Women's Business Development, West Women's Business Center fits in as well. And West is part of our SBA Resource Partner Network. So our resource partners to us at SBA is sort of like an extension of what we do, because they focus on small business technical training. And as Kelly mentioned earlier in the preface to my side of the presentation, they also have the loan application. They can help you with a loan application and put the package together. So when you sit in front of a loan officer or in front of a micro lender or CDC, you have a strong package with your financials as well as future projections of your business. Our resource partners, such as West, are approved and partially funded by the SBA. In Northern California alone, we have 34 offices and 300 plus advisors. So there's sure to be somebody there that's an expert in your field that can help you out with the application as well as advising on your particular niche industry. So again, our West Women's Business Center was kind enough to invite me today, and they're definitely our, part of our resource partner and part of our Women's Business Center. Their their web page is found below for further questions. And let's see, lastly, here is my direct email. So if someone has a question and rather not, talk about it in the public forum, you can certainly email me directly. Under that is our SBA, our district office website, and it does list a calendar of events, including webinars, trainings, and things of that nature. Or you can reach out to our staff through a general office email there. And just to, you can also sign up for our weekly newsletter to stay abreast of what's going on in SBA and how it impacts your small business. And again, there's no need to rush and write all this down. I will be providing Kelly an Adobe PDF of this entire presentation so you can reference back afterwards. And with that, Kelly, that's it for me. So I'm happy to take any questions or, or answer polls. Thank you.
Yeah, thank you so much, Maria. And thank you to both our attendees for staying on. If you don't mind taking a moment to fill out the poll, this feedback will be very important. It helps us continue to get funding to bring these webinars to you for free. So really quick, just to reiterate while you guys are filling out the poll, just to reiterate what Maria talked about, that today's webinar was brought to you by Women's Business Center. These are all the California centers throughout California. So if you're not local to the Mendocino Lake County, please do find a center that's close to you. And if you are not within even California, just know that there are small business development centers all over the nation. This is just a list of the Northern California centers, but if you check out the SBDC website, you should be able to do a zip code search to find one that's closest to you. And with that, thank you so much, Maria. Thank you, participants. I appreciate everyone's time and hope to see you all at the next webinar.